Source is the reason for the profit every season. What's up, MBU? The grind never stops, family, because we already know preparation beats luck every single time. Before we dive into this chart, remember the disclaimer. This content is for educational and entertainment purposes only. It is not financial advice. Every move you make in the market carries risk, so always study, confirm, and take responsibility for your trades. Now, with that out the way, let's talk about what's happening right now because this setup is looking crazy. We are sitting right in the middle of what I call the whole zone. Some people call it the trap range, some call it the consolidation pocket, but I call it the whole zone because this is where the market tries to trick both sides into doing too much. The stock is sitting around $20.19. The top of the range is $21.39. The bottom of the range is $19.82. If you have made money inside the whole zone, congratulations, because that's not easy. The price action inside here is wild. Candles shoot up, fake breakouts happen, and then boom, it reverses. So if you've been able to profit, salute to you. Still, the smartest play for most people is to wait until you see confirmation at the bottom or at the top before you jump in. When I say confirmation, I mean wait for that clear turnaround candle, aka the moment when the buyers or the sellers clearly went around. That's your green light. Now let's talk about why I'm a little concerned. When I looked at the 1 hour time frame, something stood out. You know the old rule. 3 knocks on the door, and the 4th knock usually breaks it open. We've seen that pattern over and over. But this time, it didn't behave the way we expected. We got one test, then another, then a third on September 26th, and then again on October 3rd, the stock came back down and tested the same area. That makes 4 knocks. Normally, that's the moment the floor gives out and it falls straight through. But instead, it created what looks like a higher low around $19.10. That's weird. That tells me something is shifting under the surface. Maybe it's accumulation. Maybe market makers are collecting shares while retail traders are getting impatient. It reminds me of what happened with Nvidia before its stock split. I remember staring at the chart thinking they had to come down and close the gap, right? They had to retest those earlier zones, right? But they didn't. They just kept climbing higher and higher until the split announcement came, and then afterwards, that split acted like the retest. So in theory, we could see the same type of behavior here. They could stall around $19.10, hold that higher low, and then start pushing back toward 21 or 22 without ever touching 18 again. Later, maybe a stock split or a catalyst will bring them back down to clean up unfinished business. For now, though, this could be a trap for anyone expecting another deep drop. Still, you never assume. If $19.05 breaks with strong confirmation, then yes, the next zone to watch is $18.41. If that gives out, the next support sits around $17.45. And below that, there's a small gap around $17 flat. But remember, the lower we go, the better the reward if the bounce shows up. Patience is key. Never chase, never panic. Quick break. If you're getting value from this and learning how to see the market differently, you already know what to do. Tap the like, drop a comment, maybe even subscribe if you want more breakdowns like this. We keep it simple, real, and rooted in discipline. All right, back to the chart. Notice how sideways they've been moving today. That's not random. When big money wants to load up, they keep the price locked in a tight range so the volume looks boring. But if you pay attention to the candles, you can spot the footprints. Small wicks on the downside, strong closes near the middle or upper body, that's quiet buying pressure. And those higher lows, that's confirmation that demand is sitting right under the surface. Now the question is, will they break out above $21.39, or will they roll over and test the patience of everyone watching? Here's how I see it playing out. If the price pushes above $21.39 with 3 solid confirming candles, I'm talking full body closes, not weak spikes. That opens the door for a move toward $22.25. If that level breaks, the next target is 23 even. And if momentum keeps building, there's a thick volume bar, sitting around $25 that could pull the price like a magnet. Volume doesn't lie. When you see that kind of imbalance, the market tends to move toward it to fill liquidity. But let's not pretend this is a normal chart. This stock has been irrational lately. They just announced new affordable models, big catalysts, and positive news that the chart hasn't fully priced in yet. That's why I'm cautious. When the fundamentals are getting better, but the chart looks sideways, that's usually a setup for a sudden move. And the direction of that move depends on who blinks first, the bulls or the bears. Now think about this spiritually for a second. In life and in trading, sometimes God will test your patience inside the whole zone. It's the place where you're unsure whether to move or stay still. But the discipline you build there is what prepares you for the breakout. Everybody loves the breakout candles because they look exciting, but it's the waiting season, the consolidation season that actually builds your wealth. Proverbs tells us that steady diligence brings profit, while haste brings poverty. That's the whole zone principle. If you rush, you get shaken out. If you stay grounded, you catch the move that others miss. So while everyone's panicking, asking if it's going to crash, remember, we don't fear red candles. We prepare for opportunity. Each dip is a test. Each retest is confirmation. Each breakout is just the reward for staying faithful when others folded. That's the mindset that separates investors from gamblers. Speaking of faith, you know how I like to sprinkle in perspective. Every time we look at a setup like this, I remind myself that the same patience it takes to wait for confirmation is the patience it takes to grow spiritually, financially, emotionally. The chart doesn't just reflect the market, it reflects us. When you chase, it exposes greed. When you freeze, it exposes fear. But when you stay calm, focused, and strategic, it shows wisdom. That's why at M.B.U. we trade with purpose, not emotion. Let me circle back to the technicals real quick because I want to make sure nobody misses the key markers. Write this down. Top of the zone, $21.39. Middle price right now, $20.19. Bottom of the zone, $19.82. If you see weakness at the top, be careful of fake breakouts. If you see exhaustion candles near the bottom, that might be the early sign of a reversal. And if you're unsure, do nothing. I repeat, do nothing. Sometimes no trade is the best trade. When you feel tempted to jump in early, take a breath and ask yourself, has the market confirmed my theory? If the answer is no, then you're gambling, not trading. Confirmation is your best friend. 3 solid candles, clean closes, and no emotional impulse. That's how you win consistently. I'd rather take one confirmed move and walk away with peace than chase 10 unconfirmed ones and end the day frustrated. Peace is profit too. Halfway through this breakdown, let's slide in a little humor because the algorithm loves it. You know how traders say they're diamond hands until the chart drops one candle and then suddenly they're plastic? Don't be that. We stay solid here. We wait for what we know. Now zooming out to the one-day time frame gives another layer of understanding. You'll notice a potential wedge forming between that 2139 resistance and the series of higher lows starting from about 1870. That compression often leads to a breakout, and whichever direction it goes, the move tends to be strong. That's why I keep saying be ready, not reactive. The preparation happens now, not when the candle breaks out. Let's talk scenarios. If the breakout happens to the upside, you already know the roadmap, 22.25, then 23, then 25. But if the breakdown happens, first stop 1841, second stop 1745, then the gap fill around 17 flat. From there, I'd expect buyers to step in heavily. That's the range institutions love to defend because it's a discount zone. So keep that in mind if you see capitulation candles or heavy selling volume. Remember too that not every drop is bad news. Sometimes it's a setup for an even stronger run later. If you've studied market cycles, you know accumulation always comes before expansion. The longer they hold this range, the bigger the eventual move. That's why I'm patient. Patience pays. All right, family, let's pause right here. That's the end of part 1